Good afternoon, everyone. It is August 14th. It is a Wednesday of OPEX week. And I just wanted to jump on here and talk a little bit about what a typical OPEX week would look like. Most of you have seen this sort of setup and or drawing for an OPEX week, but it's always good to revisit it if you haven't. Um, we are in options expiration week, and what we will typically get is some chop throughout the week, but will typically range, right? So you see here we have Thursday and Friday. We talk about a pit bull low on a Thursday or Friday. This could potentially, be that pit bull low down here. But what I like to do is draw a bar between the gaps between Thursday and Friday of the week prior to OPEX week. And then I draw that little bar, and that's sort of the target area that if we have a regular OPEX week, we're going to range. Like for this, in this case, we didn't really get too big of a gap. It was a little bit of a gap down between Thursday and Friday. But we've managed to kind of grind up here. And what a typical OPEX week will do is it'll swing up, it'll maybe swing low, and then it'll come in to roughly where we sort of started. And so this is just a generalized target. Now we've had OPEX weeks, obviously, that we get into OPEX week and it just goes like that and closes way up here. But really, the market makers are trying to cause the most pain for the most people. Yeah, OPEX means the monthly options are expiring this week. It's always the third Friday in the month. That week, the monthly option expiration, right? And so you'll get, and you can see the little dotted lines here. You'll get the swing up or the swing down. I mean, it works both ways. But what happens is you generally kind of come back into that sort of area, that Thursday Friday gap between those two. So just keep an eye on that. I'm not saying that that's what's going to happen. We did come up here and touch a pretty key at about 545 VP level, which I don't have marked on here on this particular chart because I wanted it to look nice and clean for everyone. And I'm sort of imagining that we'll kind of work our way back down to through the end of the week. But that's just that's just my thoughts. The other reason for that, let me open a different SPY chart so I don't wreck this one. Is oh no, that's not going to work, is it? So sorry, it's going to change it. Let's see. Let's just create a new layout. No, that's not going to work either. Because all I really need here is VRVP. Okay, so you see what we did here. If I back out to, like the 65-minute chart, let's change my VRVP really. Let's make it I think I do 150. Okay, now even though you see this is on the right hand side, it's a little bit different than my normal charts, is if we encapsulate the price action from these days here and these days here, we've come way down and we've worked our way, and you see this red line. This is a major point of control level that we came up, and we nearly ticked to the penny. You can see it right there. It's going to go away because it's not drawn. See, it's not. This is visible range. So we've got here and here. So what I can do is I can come in here and mark it as well, so that when that auto one goes away, when I do that, you can see we came in and we basically tapped it down to the nearly the penny, right? So the thought is we came up into that level and now we're going to kind of drift back, maybe back into this VP area here, right? Which is, if you come back over here, that's this chunk right here. Now I know we're switching sides, so it gets a little stranger, but that's kind of what we're looking at. Could I enlarge this chart to show the gap? Yeah, it'll kind of break what we've got going here, but look, if we go to a 5 minute, there wasn't a very big gap, right? It was just a close on a high and then an open on a low. Right, we closed on that high there and we opened on a little bit lower than that. So it's not major, but it also lines up with a pretty serious VP level. A lot of times you'll get a nice big gap like this one here, but we didn't get that. And that's okay. It just kind of gives us a level, an area. No, I don't normally play GDX or GDXJ. Okay, so does anybody have any questions there? Given the VP, given the move up that we've had, given where we are on the chart, that's what sort of all of those pieces kind of come together. The fact that it's OPEX week to make me feel, and I don't know if Nate Bear's in the room, but the kind of idea that we could pull back into that 530 area on this buy. Makes a lot of sense to me. I don't know if you agree with that or disagree. Of course, if you disagree, that's what makes a market, right? Oh, he is? Okay. Well, there you go. You can ask him when he comes back, right? But I know he was shorting in this at the same time I was up here, so that would make sense that he has a very similar view. Learning about the Sniper 2.0 setup fog. I have a video on that, which I posted in yesterday, which if you remind me of as I jump off, I can post that into chat too, but that's posted up and should be easy to find. I think the label is 1.0/2.0 and it tells you the difference between the two. Very, very briefly, the 2.0 is for instance, on today's chart, the move from VWAP to this move here, that's indicative of a 2.0 move. Let me go to a 1 minute chart here so it's a little easier to read. So you're catching continuation, right? Versus just trying to catch the bottom or the top, right? We caught a 1.0 move here, right, for about 50%. Could have gotten a double, but I was happy with that little 50% winner there. Caught one of those, and then there was a continuation trade here. So the difference is the 1.0 is catching tops and bottoms, right, on the reversals, and the 2.0 is catching a continuation move. Because the tops and bottoms tend to be a little tend to be smaller wins, whereas a continuation you can percentage wise you can make a lot more. So there are some you see it right there. Nate Bot put it in. I'm betting John did that. Thanks, John. Appreciate it. And you can find it in there if you kind of dig around, and if you remind me when I'm done here, we can. Yeah, that's the. What's more efficient? It depends. To me, it depends on what the market's doing that day. So the question was Sniper 1.0 and and versus 2. What's more efficient? If you are kind of chopping around within a range, I think the 1.0s tend to be more efficient and more successful. However, if you're in a trend day, you're going to get stopped out, right? So if you look here, you could have had one here, you could have had one here. I consider this a trend, right? And so capturing that trend, you can just go in the direction that the trend is going and not have to try and catch these tops and bottoms. I wouldn't call today a trend day. This section that I just kind of marked was a trend move up, and it made a new high on the day. But then here we're chopping a little bit. Over here we're chopping a little bit, and over here we're chopping a little bit. So really, these are the two kind of trend moves that you could have caught a 2.0 on. Otherwise, you're just going to get chopped to death trying to play the 2.0. So it's just kind of learning what the market is doing on the day and then adjusting your strategy. Like for instance, a 1.0, is up here, and it continues into a 2.0, right? So if you're really playing them well, a 1.0 can turn into a 2.0 for the most profit. Generally, on a continuation trade, I am looking for you see these clouds, right? I'm looking for a change from, these are trend clouds, from an upward trend to a downward trend, right? So that's condition 1, right? I'm looking for that switch. I'm not going to try and write it here, but that's the switch. So I'll put an S, right? And a switch between those two, and then I'm looking for 2 red candles, right? So I'm looking for a switch, and I'm looking for red candles on this early in out indicator with these candle colors. And then I'm looking for a move, and then 3, I'm looking for like a change of character. You see that COCH, or break a structure, right? And that informs that continuation. So those are the things that I'm looking for. Conversely, on the way up, I'm looking for light blue. This should be red or light blue. And sometimes I use a 1, 2, and a 3-minute chart. It kind of varies. Typically, the 1.0 tends to work better on a 2-minute chart a lot of times. But I kind of toggle between them. I like when I get a signal on the 1 minute, and I get into a trade, and then it confirms on the 2 minute and the 3 minute. Then I know we're in business. So there is quite a bit of toggling around. So here is yesterday we did this. We talked about how to set up your thinkorswim to capture these moves, and this is how I do it. Okay, I have an active trader window open on the top, and then I have another active trader window on the bottom. These are my purchases, right? So I have the SPX option chain pulled up under my trades tab, and I have the 0 DTEs open. Let me just shut all of these so that it's not confusing, right? Let's go to 14. And so what I'm doing is I'm grabbing typically the in the money. So I'm going to copy this, and I'm going to put it in the chart above, right? So those are my calls. And then I am copying the slightly in the money puts, and I'm putting those in the lower section. So calls are on top, puts are on the bottom. so that as the chart, as I'm watching the chart, whoops, sorry about that. As I'm sitting here watching the chart, I can go either way depending. And sometimes I have to adjust because let's say we get a massive move up and I'm not in a trade, then I'll constantly kind of be coming back here and making sure I'm kind of at the money. Unless I want to risk, zero DTEs, I don't recommend really going out of the money unless you want it to, unless it's going to move right that second. Yeah, John, this is being recorded. But you could play higher in the money. They're just going to move faster, and your risk is going to be a little bit more. But if you have the time and you're really paying attention to these, I come back and forth, and I just kind of grab the at the monies. And then so on top of that, I've also created stop out and profit targets, right? So as you can see, I have options. I've changed my quantities to 1, 3, 5, 10, and 20. So, the default for this is stock. And so like if you see if I put, SPY in here, it's going to give me 100, 300, 500. Well, I don't want to buy 100 contracts of the SPX. That's just outside of my risk tolerance, right? So what I want is, 2 or 3, depending, or 5, if I'm feeling really saucy, right? So that's why I have these here, right? So I can just toggle between those. And what I've created is a sniper SPX bracket order trade, okay? So I'll show you how to do this, but once I put this on, right? Like if I'm going to buy one of these, let's say I think, and this is up on a different window, which is why I have to keep toggling back and forth here. But let's say I think, okay, I'm going to buy a call right here. Obviously, I do not have a signal, so I'm not saying that we're buying calls right now. But let's say I was. Right now, if I put this on, if I was buying one contract, it would buy that contract at limit, or if I go market, it'll mark it in, right? There's not a very big spread here, but it automatically puts a bracket order in for 25% on the profit side and 15% on the stop loss, okay? And you can set those for anything you want. And the way to do that is you go to this template pull down and you say, okay, I'm going to go brackets. Okay, so that brackets pulls up both a profit target and a stop loss. And then you can use, dollars, right? You can use a ladder or you can use a percent. And so I come in here and I say, okay, I want this to take me out at 25%, and I want my stop loss to be at 15%. You could do 10 and 20. You could do whatever you want, right? And then once you've done that, once you've set those, you come in and you hit this little tag and you can title it, name it, whatever you want. And that makes it so that it's in here long term. Okay, so all you have to do is pull this up and exactly those percentages come in and give you what you want, right? So the other side of that is if you don't necessarily want to put a profit target in, but you definitely want to put a stop loss in, and this could be like a sniper 1.0 type trade. You come in and you put an OCO order in, okay? OCO is just a stop loss, right? And so if you go 10%, you want 10% stop loss on your trade. Hold on a minute. Sorry, you got to make that a negative. Sorry, negative 10%. Okay. So as soon as I put this trade on, wherever it fills me, it says buy. Hold on. What am I doing? Stop. minus 10. It says buy. I've got to figure out why it wants to buy that and not sell it. Hold on a minute. See, I don't use that one. Oh, there we go. Okay, so that's a stop. Well, the OCO one looks like it's just going to give you from that level. That's interesting. Okay, so you're going to have to come in and do one with brackets. Probably should have played around with that first. And then you can turn off your limit. There you go. So you can do the one with bracket and then just turn off your target if you just want a stop loss. Right? So that's how I would do that. But I like to put, nice thing about putting a target in and a stop loss in is you can put this trade on and it takes your emotions completely out, right? Completely out of the trade. So you can say, okay, because what will happen so often is somebody will come in here, or somebody, you'll come in here and you'll put on a trade. Let's say here, right? Let me move this over. Let's say right here, you put on a trade and you're trying to snipe this thing to the downside, right? You see the trigger there, you see the candle color. I'm trying to catch a sniper here, but I haven't set a stop loss. And it comes to here and it consolidates for a little bit. So you're like, okay, this thing's going to work. It's going to roll over. And then it starts doing this. And you're like, well, okay, now I'm I'm past my loss. So if I don't want to book it. So this is how brains typically work. I'm going to wait. It's going to come back. And then you're way up here and you're like, oh crap, I'm at a 50% loss. And then, oh, look, it's turning. Great. This is going to be awesome. And then, nope, it does that. Pretty soon you're at 100% loss or 90% loss and you haven't protected yourself. And these things move so fast that I've found that the best way to take the emotion out of that trade, or, you've decided, okay, this is going to roll for me. This is great. Let me use a different example because right here. Let's say you shorted this piece. You're like, yes, I got it. And if you didn't have a profit target in here, right, and you're like, this thing's going to go further. I swear this is going to go further. I'm not going to take my profit just yet. And then all of a sudden in 3 candles, you're right back to zero. And then, you're going the other direction and you're like, crap, I should have taken it off at a certain level, but I got greedy, right? So putting in both a stop and a target help alleviate the emotions behind not stopping out and hope, right? That would be hope. It alleviates both trading with hope and greed, right? It just either the trade works or it doesn't work, right? And once it's on, all then you can evaluate is, did I put on a good trade? Was that a smart place for me to put on a great trade? But now I don't have to worry about both hope and greed taking over. Does that make sense? I think a good percent stop for the SPX is 15 to 20. I think 10 is too tight. Okay, so does anybody have any questions on how to do that from a Thinkorswim active trader standpoint? So here, I'll show you. So on the sniper trades, I have these set to percent, and I have 25 as the limit, plus 25 as the limit, and minus 15 as the stop. Okay, and that's recorded, so you can watch that over again. But that's how you do it. And then once those are in, so for instance, let me go to what I did yesterday. I'll just grab a SPY, that's not gonna, doesn't matter what happens here, right? So I've got my Sniper SPX SPY call, for 38 cents, right? So as soon as I buy it, right, it gives me my profit target at $10 and my stop loss at $5. And then you can just let that trade, sorry, it goes away when I do that. You can just let that trade work. And if this continues to move up, right, I can adjust the stop loss just by dragging it. I don't recommend doing that once your stop loss is in until you're in the money quite a ways and you want to make it a free trade, and you can move that up to break even, right? So once the trade starts going in your way, you move it up to break even, and now it's a free trade, right? It costs you nothing. Or if for some reason you want to move your profit target down, you can. Or if you just want to walk away, say, you know what, I got something to do, my trade's on, if it works, it works, if it doesn't, it doesn't. I'm going to take my emotion completely out of it, and now you can just let the trade work. And then you go back and you evaluate, okay, are my is 25% and 15% an accurate, does that seem to work for the style trades I need to make, or should I adjust them to something else, right? Then you can also look at, are the criteria that I'm using to make a trade, are they good? Am I making smart trades? I know I'm managing my risk, right? My risk reward is good, but am I better than 50-50 on my trading choices? Okay, just a minute. All right. Does that make sense to everyone? And I'm just going to let this one play out. It looks like it might want to stop me out here, but there it goes. Stop me out. $5 loss. Yeah, you can put a trailing stop in there if you prefer. That's also a good tool. I find that the SPX can be pretty rangy. And so, if you put a trailing stop in and you put it a little bit too tight and you move it up, it'll pull back a little bit and take you out, right? And then, which is fine, but you're not really maximizing your trade. That's kind of what I've found. So I just move that up manually, but you can certainly do that. All right. Well, I hope that was somewhat helpful on the sniper trades. You can find that video on how to do each one of them if you want a more detailed example of how they're traded. But that should hopefully help in setting up Active Trader for all you TOS users. I will get that posted here in the next 30 minutes or so, and I will talk to you all later.